the banks continue to look like they're in more and more trouble. We need to talk about that, talk about some of the big economic data that's coming out this week and a big event that's happening in crypto in the next 48 hours. So we're going to get into all that. If you don't mind, please hit the subscribe button underneath the video. If you've seen videos like this in the past, hit the subscribe so you see future videos too. I'm going to continue to make these whenever news comes out, not just, once a day or anything like that. I'm going to do it as news comes in so that way you get the most up-to-date information. Turn that bell notification so you know right when I post a video. There's also a link to the Patreon underneath the video in case you want to see what I'm buying and selling. I just sold a crypto in the last 24 hours and I bought other cryptos with it. Also, I'm going to be doing a Q&A here very soon, so you can post questions in there. Now, crypto is down just a little bit, 0.8% over the last 24 hours. Bitcoin and Ethereum coming down a little bit. XRP up 4%. Some good news for XRP holders. But what I really want to talk about at first is the banking collapse. We know that there have been banks going down left and right, and there are still a lot of banks in trouble. For example, Charles Schwab, credit default swaps, basically the insurance that people pay to be basically protected against default, they're exploding in price. They went from 70 to 124. Now, to be fair, this is over a few months, so almost a double in price. I think Charles Schwab is still in a much better place than other banks, but you can see even a pretty strong bank is still, the price to insure is still going up pretty quickly. Compare this to something like Deutsche Bank. Deutsche Bank went from about 90 to 190 in a few weeks. So people are paying a lot more and the price has gone up a lot faster than Charles Schwab. Compare this to something like Credit Suisse. Credit Suisse went from 50 all the way up to 250. So it 5x'd in price. And then we had them get taken over. Now, some banks like Silicon Valley Bank went up much more. They were in like the 1,500 to 2,000 to 3,000 range here instead of 250. But still, these banks are not in a good place. And the main reason for that is because a lot of these banks are holding treasuries that are worth a lot less than their face value because the Fed continues to increase rates. And then people hear about that. They maybe start pulling out money. We can see that here. The small banks, small domestically chartered commercial banks are having to borrow a lot from the Fed. Basically, you can see a huge increase over the last couple weeks, and that's because a lot of them are having withdrawals. You can see about $100 billion worth of withdrawals in just the week that ended March 15, and we'll get more information on this soon, but you can see people continuously are taking money out of the banks at the same time that their treasuries are worth less, so a lot of them have to sell their treasuries at a loss, and that can cause massive problems. And people hear that and then want to run on the banks more. They're moving their deposits to bigger banks as well. You can see small U.S. bank deposits fell to $5.46 trillion in a week ending March 15 from 5.58. So $120 billion in a week. Now, I think this might actually be worse the next week because this is when banks start to explode, but we didn't really know how deep this was, how bad this was. I mean, just last week, I think it was. Regulators and bank employees, state officials over in Switzerland started to take over Credit Suisse. People were working on a Sunday to do this. Just last week, we had the Fed announce that they were going to increase liquidity on swaps across the nation. I don't know what's going to happen this weekend, but we just had a meeting yesterday between Gary Gensler, Janet Yellen, Jerome Powell, the head of the FDIC. We had other government entities as well, and they all met and concluded that the banks are fine. Don't worry. So just kind of crazy, but this continues to get worse. It seems like more information is coming out on how bad this is. So at this point, I would just be careful. If you have over 250 in a small bank, just be careful of that. This doesn't seem like it's going to be letting up anytime soon. I did take a trade in a bank about a week and a half ago, and I got out of it this week because I was up about 6 to 7.5%, if you include the dividend, 7.5%. And it just seems like there's a lot of uncertainty, so I didn't really want to keep my money in it. But I got out of it. Maybe there's going to be a good entry point at some point in the future, but this is so much uncertainty. It's crazy to look at what's going to happen next. We don't really know, but the market's pricing in the fact that the Fed can't continue to raise rates at this point because too much is breaking right now, and these swaps continue to get more and more expensive. Now, I want to talk about some of the stuff happening this week. We have the GDP second revision coming in on Thursday, so we might see a jump or a dip in the market depending on where this was revised to. Initial jobless claims, personal income, and personal spending on Friday, along with PCE. This is the Fed's preferred inflation gauge. Now, previously we had 0.6%. They're not showing a forecast here for PCE, but core PCE coming in at 0.4%. And if we look here, last month we had 5.4%. We actually saw a jump from December. Hopefully this continues to come down. It seems like inflation's calming down based on other metrics that I'm looking at with Truflation, with the CPI, PPI, that kind of thing. So I think PCE will probably come down this month. We'll have to watch, though, because this obviously will influence the market a lot. And then we have the end of the quarter. So we're going to start getting reports from different banks here soon. We're going to get reports from different companies. So be on the lookout for that. Tesla will announce their quarter end numbers in the next couple weeks, probably next 2 weeks. And then we'll start getting earnings reports, which is crazy. So this is not going to be a slow time for the market. I think we're at a crazy volatile point, kind of like COVID, where there's something new happening every day. So be on your toes right now. That, again, is why I say maybe you should check out the Patreon. If you don't like it, you can always cancel it as well. But you want to be able to get information quickly. Otherwise, Twitter's a great source as well if you're following the right people. Speaking of that, on Twitter, Polygon Labs had announced that they have their ZK Day 2.0 on March 27. This is going to be the launch of Polygon ZK-EVM mainnet beta, the journey to the frontiers of Web3 that will take Ethereum farther than ever before. So they're going to have this coming in 2 days. Their ZK-EVM is going to hit their mainnet. Now this will improve scalability, security, maybe increase the price. Now a lot of the time this is baked into the price. People buy ahead of this, so the price starts moving up ahead of time. Could always see a bit of a dip as well, but this will overall help the cryptocurrency. It will help the project. It will help Ethereum scale as well. So I think this is overall good news for Polygon. Be on the lookout for this in just 2 days. I'm sure we'll hear more information on how this is going, how this increases their scale. Again, I think we're going to see a lot of volatility in the market. I don't think it's going to get quieter here for a while. And again, we have a lot of things picking up with the end of the quarter. A lot of people are also pricing in the fact that the Fed will actually have to cut rates here soon. We'll have to see if that actually happens, but the market's pricing in a rate cut by June or July. So could be an interesting time. Thank you so much for watching. I really appreciate it. Check out the links underneath the video, and I'll see you in the next one. Bye.